Hi, my name's Cliff Nyer, and I'm here today to talk to federal employees about their short-term disability options. We have a short-term disability plan available for federal employees with a 12-month benefit period, which means, in plain language, if you were to be injured or you had an illness, your doctor puts you out of work, you could be out theoretically for up to 12 continuous months per event. Okay? There's two things that I really love about the policy that we have to offer. And those two things are the reason why I think our policy is the best policy in the market. Number one is elimination periods. An elimination period is the number of days you need to be out of work before the policy kicks in and begins to pay you cash benefits. We have a choice of a 14-day or a 30-day elimination period. The 30-day is slightly cheaper, but you don't begin to collect benefits until day 31 of your absence. The 14-day has an additional benefit included in it. That benefit is if you were to be admitted to the hospital for an illness, it waives the 14-day waiting period and it begins paying you on day one. So in that situation, you're looking at the difference between start accumulating benefits day one or start accumulating benefits on day 31. If you were to have an accident, you still have to wait the full 14 days. Illness, admitted to the hospital, waives that, paid day one. Okay, I love that. That's an excellent option. The second thing that I love about the policy is pre-existing conditions. Pre-existing conditions are things that you're currently under medical treatment for. I believe that our policy is the best policy in the market for pre-existing conditions because pre-existing conditions will be covered 1 year after the policy effective date. So once the policy is 1 year old, whatever existing conditions you have right now would be covered 100%. All right? So I'm going to put it in easier to understand terms. If I have a torn rotator cuff and I know I'm getting surgery next month, this policy is not going to cover my torn rotator cuff surgery. It will cover anything else that could happen to me. If I had an appendicitis and I end up in the hospital, I had a car accident, or any other thing that could possibly happen, I would be covered. But I'm not going to be covered for this torn rotator cuff that I know I'm going in to have surgery on next month. Sorry, nobody's going to do that. Doesn't exist in the market. However, if I have that same torn rotator cuff and I go out of work 1 year later, in the meantime I've been getting my cortisone shots, I've been keeping it going. I get 1 year down the road and I decide, you know what, I can't deal with this anymore, I'm going to have it taken care of, covered 100%. Okay? Maternity leave. Maternity leave is covered. Standard maternity is 6 weeks. If you were to have a complication of maternity, I don't know, doctor wants you on bed rest, there could be a lot of reasons. As long as the doctor has a medical reason for keeping you out and he's willing to sign off on that, it would be covered. But the standard maternity is 6 weeks. Pregnancy must occur 10 months, or delivery, not pregnancy. Delivery must occur 10 months after the policy effective date. That would mean it's not a pre-existing pregnancy. Okay. Taxation. The good news on taxation is there are no taxes. The reason there's no taxes on the money that you're going to receive is because the federal government doesn't have the ability to tax it because you're going to pay for the policy with after-tax dollars. If you have paid taxes on the dollars you're using to purchase it, the government can't tax you on the benefit. Excellent. Payroll deducted. It is payroll deducted through the allotment system. I will give you a bank routing number. I'll give you an account number and the amount that needs to be withdrawn. We would do that over the phone. I would tell you what you need to put in. You go online, log into your payroll system, you put in what I tell you to put in, and it starts coming out of your check on the next pay cycle. All right? Sign-up procedure is fairly simple. We use a thing called DocuSign. I'm going to take your name, your address, your phone number, your height, your weight, a little bit of information. Takes about maybe 2 minutes to gather. I'm going to enter that into a document, an application, which I will email to you. And when you receive it, you'll open it up. It'll be in the DocuSign website. You'll open it up. You're going to need to place 3 signatures and 2 sets of initials on that document. You're going to hit send, and it's going to be returned to me. Done. Your deduction's done. The application is done. Everything from there, I take care of the rest. So, if you feel that this is something that you need, I feel it's something everybody needs. We all have insurance on our car, on our house, on our health. But if you don't have the money to pay for the things, that pay for the car, that pay for the house insurance, that pay for the house, so forth and so on, pretty important. We call this paycheck insurance, so everybody should have it. In addition to disability insurance, we also do life insurance. We help you replace your FEGLI life insurance, which may seem like a good idea when you get into it, especially if you're younger. It's fairly cheap. But once you hit 45 and above, it starts to become quite expensive. The costs are not fixed. They're very flexible. Every time you hit 5 years older, they increase your rates. Every time you get a pay increase, whatever the percentage of your pay increase is, your FEGLI rates go up by the same percentage. And when you retire, it simply is not affordable. So do yourself a favor, give us a call. We can help you with that as well. So I hope this finds you well, and I hope to speak to you soon. Thank you.